From July 1st, 2026, accounting practices across Australia will step into a new era of responsibility, and you'll notice some changes. New anti-money laundering and counter-terrorism financing laws are coming into force, regulated by AUSTRAC, Australia's financial intelligence agency. If you're a client of an accounting firm, it's natural to wonder, what does this mean for you? Let's start with the basics. For the first time, accountants will be covered by Australia's anti-money laundering laws. This means your accountant will be legally obliged to verify who you are, monitor for suspicious activity when they provide certain services, and keep detailed records. These obligations bring Australia into line with international standards and are designed to protect our financial system from being used for crime, often without professionals or their clients even knowing. So, what changes should you expect as a client? In practice, this might mean being asked for identification documents, details about transactions, or additional paperwork when using services such as setting up a company, managing a trust, or involvement in real estate. If you've ever opened a bank account, you'll be familiar with these types of checks. They're not a sign of suspicion. They apply to absolutely every client, no matter who you are or what you do. Importantly, not all services are affected. Routine tax returns or general advice are usually not covered. But if you ask your accountant to help with significant transactions or complex structures, the new rules kick in. Your firm will also need to register with AUSTRAC if they provide these designated services. A key part of the process is identity verification. This isn't optional, it's a standard legal requirement now. You'll be asked for your name, date of birth, address, and a government-issued photo ID. For companies, trusts, or other entities, information about directors, owners, and trustees may also be needed. Your accountant will use records they already hold where possible, asking only for documents that are missing or need updating. If you've been a client for years, you might wonder why you need to do this now. The answer is simple. The law applies to everyone, not just new clients. Not all clients will go through the exact same checks. The level of inquiry depends on the risk. For most, the process will be simple, but there may be more questions if complex structures or international elements are involved. This doesn't mean something is wrong. It's just part of a risk assessment your accountant is required to do by law. You might even be asked where your money's come from, or if you're a politically exposed person, someone who's held a prominent public role, or is close to someone who has. These aren't personal or targeted questions, but essential parts of the new standards. So, what happens if you don't provide the required ID? Your accountant may not be able to provide some services. The law is very clear. Verification must occur before service starts. That's why responding promptly to requests for information helps keep everything on track. Your personal details remain safe, protected by privacy laws. Accountants are required to keep data secure and only use it for legal purposes. From time to time, you may be asked to update your details or confirm certain information, especially if your circumstances change, like moving overseas or restructuring your business. There's also an obligation for ongoing monitoring. If, during their work, an accountant spots something unusual, they're required to assess it and may need to report it to AUSTRAC. This process is confidential. By law, your accountant cannot tell you if such a report has been made. In rare cases, if identity checks can't be completed or if risk can't be managed, a firm may need to decline a service. But for the vast majority of clients, the process will simply become part of normal onboarding and periodic checks. Some clients might have specific situations, such as lost trust deeds or involvement with multiple entities. Each designated entity will require identity verification, but individuals only need to provide their personal ID once, even across different roles. Overseas clients aren't left out. Remote or online verification is available. There's a cost to compliance. Firms will invest in new systems, staff training, and processes. If fees need adjustment, your accountant will discuss this openly with you. So, What do you need to do now? For most clients, nothing today, but be ready to provide identification or information when asked. The best preparation is to keep your photo ID current and your contact details up to date. If you're unsure about any step, reach out to your accountant directly. They're there, not just to help you comply, but to explain why these new obligations exist and how they work in day-to-day practice. These changes are about strengthening trust and integrity in Australia's financial system, protecting everyone, including you. Transparent communication and cooperation will help ensure the process is clear, secure, and as smooth as possible. For detailed guidance, Austrac's website is a useful resource, but your accounting firm is your first port of call whenever you have questions. If you have concerns or want more clarity on how the new AML/CTF requirements affect you, simply get in touch. With your cooperation, these changes will be straightforward, helping to keep your financial affairs secure and compliant well into the future.